Let's kickstart the show then. And Shreyansi, well, lots to talk about when it comes to the global handover. You have US CPI, you have the FOMC outcome, and look at what that has done to US markets. There is really no stopping for S&P, is there?
Well, absolutely, S&P and NASDAQ both, because Dow clearly is the only outlier at this point. So when you take a look at futures, though, you're not looking at much of a move there, because S&P 500 as well as NASDAQ 100 futures were marginally up, and Dow on the other side, like I mentioned, was the outlier here as well. So fell about 0.1% on a futures basis. But then when you look at the strong session that we had, right, you're looking at S&P 500 as well as NASDAQ eking out some gains, with each benchmark hitting all-time highs as well as closing at records. So that's the kind of move that you're seeing when you take a look at the broader market index. You're looking at 0.9% gain coming in there. And when you look at NASDAQ, then you're looking at 1.5% of a gain coming in there as well. Now, Dow on the other side was the outlier, closing down slightly, marginally lower. 0.1% decline is what we saw for Dow then. And when you take a look at what investors were looking at, investors were optimistic after the central bank acknowledged that modest further progress had been made towards its 2% inflation target, even as it kept interest rates unchanged. We'll be talking about it later as well. And you, of course, had the May's cooler consumer price index print that also added to hopes that inflation was indeed easing. So those are the couple of things that we saw play out in the US market. Let's also take note of what happened in Europe as well, because European stocks closed higher. So whether you're looking at a stock 600 index or you're looking at DAX as well, you're looking at gains on both these indices. So Stock 600 ended the session up over 1%, and when you look at DAX as well, 1.4% is the kind of gain that we saw there as well. So Snehi, that largely is the global handover when it comes to equities. But let's also take a look at oil, because quite some strength that we're seeing there as well.
Absolutely, lots of good stuff happening in oil. Those oil prices were up almost 2% yesterday intraday, but we've seen some sort of a pullback, and we'll get to that as well. Now, crude oil futures rose Wednesday as traders bet on tightening supplies later in the year. The Fed Reserve's indication of just one interest rate cut this year and bearish US stockpile data limited these gains, and the Department of Energy sees global demand rising this year by 1.1 million barrels per day, up from a previous forecast of 900,000. The increased demand implies a supply deficit, with world production expected to rise 800,000 barrels per day in 2024. Oil prices gained nearly 2% earlier in the day, but pulled back after the US reported a 3.7 million barrel rise in crude oil inventories for last week, compared to analyst expectations of 1 million barrels drop. What's interesting to note is the move that we saw coming in gasoline as well, because gasoline stockpiles rose by 2.6 million barrels compared to just 891,000 expected by analysts. So big jump coming over there. Fuel demand increased by 95,000 barrels per day to about 9 million barrels per day total. Daily average fuel demand has been tepid, or 1.5% lower compared to the same period last year, despite the start of the summer driving season. Oil pulled back further after the Fed Reserve indicated that there's only one interest rate cut in store this year, as opposed to a forecast of 3 cuts as recently as March, citing modest progress in capping inflation. So those were the moves when it comes to your oil benchmarks. You had WTI at $78 per barrel, down 0.5%. On the flip side, you have Brent still firmly above $80 a barrel at $82.2 a barrel is where Brent is at, also 0.5% lower. What's interesting to note is the move that has come in gold overnight, because gold prices have pared gains yesterday after the US Fed Reserve has indicated there's only one rate cut in this year, citing still elevated levels of inflation. Spot gold climbed 0.3% earlier, but it is 1% lower as we speak. So very strong moves coming in gold as well. At $23.30 per ounce is where your spot gold is at, Shreyansi, right now.
Well, absolutely. And
if you like this video, then like, share and subscribe to ET Now.